Hi guys, welcome once again to my channel. Hope you guys are doing great. Today we'll be discussing some fundamental things we need to know as a beginner in trading. The basic things you need to know. Yes, as a trader, there are some basic things you have to know before embarking on a trade. Like I said in my last video, it's impossible to turn $10 to $10,000 within a very short time frame. I don't think you can take your $10, your $100, and within 3 months you're buying a Bugatti. No, no, that's absolutely a lie. Anybody telling you that is lying to you. But with consistent trading, you can build your $10 to $100 to $1,000 to $10,000 over time, gradually and consistently. The goal here is not a competition of who makes the highest amount of money within a short time frame. No, the goal here is to make money on your investment. Your $10, your $100 can grow just like your normal business out there. I always say it, trading is just like a normal business out there. You're buying and selling out there. So whatever way you think you can handle that, your trading out there, your business out there, your shop out there, your whatever enterprise is out there, to grow gradually. Same thing is what we are going to do with Forex. Yes. So today we're going to look at some basic things that we need to know as a beginner in Forex trading, growing your small account. As a trader beginning, there are some things you need to know, like your analysis. When you come here with analysis, there are two types of analysis when trying to analyze your trade, to pick a trade. We have the technical analysis and the fundamental analysis. What are these technical analysis? I'll just pick them tip. Yes, because I'm here to just break it down for you in a layman's language and tell you the important ones. Not all of them are so important. That's the truth. There are so many things there when you read about the forex trading and all. As a layman, there are some things that you just pick, and then you go. That's what I'm basically here for. Yeah, I know some people come and criticize me and say this, that, but I'm here for the layman to make you see forex in a very simple, broken down way, so that you're not scared of trading. You don't see forex as something that is too ambiguous for you to do. Anybody can trade. Yes, mark my word, anybody can trade. Just know the basic things. Understand? When we come to the analysis, the technical analysis, you have your moving average, your support and resistance, your oscillators, your Bollinger, you identify trends, you check the charts and price patterns. All those things are the technical analysis you have to understand, at least the basics of it. Then you come to your fundamental analysis, things that can influence trade. Yeah, methods of evaluating the market. You use data sources from various channels. You listen to news. Yes, sometimes your news can influence the market. Yes, for example, we remember when the Ukraine and Russia war started. These two countries are oil producing countries. So when the war started, what happened? They could not export the oil, which means outside there the prices of oil skyrocketed. So for example, if you are trading crude, for example, you should know that during this time the prices of oil will do what? It will go up. That means it's in the tendency, it's going up, right? So what do? Just stay on the buy. Simple. Buy. That's it. You make your money. No big grammar, no big logic. So those news coming from now here and there, the war, whatever news, all those news are your fundamental analysis that help you know whatever you are trading. A news can come in and then it's affecting America, for example, which means it might weaken the dollar. So anything you're trading against the dollar, it has an advantage over the dollar. So also some policies might come in, and then the US might bring in policies that will make the dollar stronger. And then they see, the dollar is now higher than so currency. All those things are just the basic things you need to know when trading. Those are the simple things you need to know. No big grammar. You study your chart, you look at your chart, You wake up in the morning and see what the chart's doing. You go with the flow. It's just as simple as that. Since we are not here to do ambiguous things, we're here to just pick our profits small by small and go. You can have $100 account and say, we're going to take 10% of my account every day. So we'll look out for markets that are of interest to us. And then we pick up our trades, we look at the market, we analyze them and say, okay, this is what the market is doing. Oh, they are buying, they are selling. You join it from wherever you have joined them. But you have to be patient. You have to analyze it and see, okay, is this really what they are doing? Sometimes you have to wait for those news at a particular time of the day. There are sites you can go to that will help you to know when to expect news. Some people trade with news. Okay, say the news is coming by 2:30. What do? Just wait. Let's wait. Let's not trade. Let's wait till 2:30. After 2:30, what is the market going to do? It's going to be so clear and obvious. It's not magic. It's not juju. It's nothing like that. It's going to be clear there for you. After the news, some people just trade. They just wait for the news, and then the news comes, and then you see the market moving in a particular direction. For that time space, we're just looking for just small profits to grow our accounts. You pick the trade. If the news comes and it's this buy on a particular whatever currency you are trading, if it's Euro USD, if it's JPY USD, if it's gold, if it's oil, if it's BTC, whatever you are trading, when that news comes in, you look at it and then you join. Simple. You pick your small profit and you leave. 10 pips, 5 pips, depending on what you have programmed yourself to, your expected profit for the day. If you have said, okay, today I'm making 10%, how many pips can generate me 10% per lot size? Yeah, I'm going to come to pips and lot size later. The lot size you are trading on. You know how many pips will give you 10% of your capital, and then once you get it, you just leave the market. You're done for the day. Don't be greedy. Tomorrow is another day. The market is there every day, so there's no way you're going to trade everything in one day. It's impossible to trade everything in one day. Tomorrow is another day. Once you're done with today's trading, you close, you go and do other things. Tomorrow you come again. And that brings me to pips. What are pips? So when trading, we look out for how many pips you can go, and we have to be consistent with it. Pip are the smallest price increment used in currency market. The smallest size increment. You have Euro USD. Maybe for example today it's trading at 1.87654. For example, your pip is the smallest movement. When you move from 5.4 to 5.5, 5.6, 5.7, that's how you count your pips. It's moving. If it still moves down, it's the same thing. It's either moving up or moving down. But that movement from 5.4 to 5.5 to 5.6, or from 5.4 to 5.3 to 5.2 to 5.1 to 5.0, those are the pips. So you're either moving positively or negatively, depending on your stance of the trade you have chosen. So that's just what pips are. So you're looking for a particular amount of pips that will give you your 10%. You just calculate it and say, if the market moves from 5 so, you get your 10 pips. That's it. Then you move on. Your lot size is, for example, is the amount with which you pick your trade. That's your lot size. You have a $100 account, for example. Now you want to trade gold. Your allowable trade, the size you want to pick the trade with. The smaller the size, the safer you are. The larger the size of the larger your lot size, the more risks you are into. So most times you're advised to pick your trades with small lot size. You have a $100 account. You just go with your 0.01, and then you watch your trade gradually. You pick, after analyzing the trade, you pick 0.01. Then it moves. At 10 pips, you are good to go. Close your trade and you leave. So, but if you pick a trade, you have a $100 account and you are picking with 0.01, not 0.1, 0.01. And then maybe you are picking your trade with 0.1. That means for every movement, it's giving you It's moving $10 per move. $10 per move. So for every pip is $10, which means if you want to make 10%, you just need one pip. Bam, you make it $10 because $10 is 10% of $100. I hope you understand. But where the problem comes in is if you enter the market and then maybe the market turns around and is doing opposite of what you have already analyzed. Now you have picked with a big lot size. You can get into trouble quickly and then you blow your account because you're in a hurry to make the money. But if you are picked with a small lot size, maybe 0.01, and it moves, each one it moves is $1, $2. It's going to take a long time, even if it moves in the opposite direction, before your account can blow. There you have the option of checking your analysis and see if you have actually analyzed this correctly. Maybe they are just doing, just a discount buy or discount, and then they are coming back later. But if they keep on going contrary to what you can close the market and then you've not lost much. But if you've chosen a big lot size, before you know it, your account goes into thin air, and that is it. So your lot size is very, very, very important when choosing a trade. When opening a trade, your lot size is very important. Very, very important. Choose a small lot size and be patient. Patience is key. Patience is key in trading. If you have to be patient, don't be in a rush. It's not a one-day thing. You are not rushing to the end of the world. You're making money, you're doing business. It's not gamble kind of. You're not just gambling it. You're doing business. So don't put your money at risk. Trade wisely, just like you will not just do in your normal business. Same thing, you apply it here. Have a trading plan. To be a successful trader, you need to have a trading plan and you have to stick to it. If we have said we are making 10% of our our capital daily, stick to your 10%. Make your analysis towards making 10%. Once you get your 10%, leave the market. From my experience, I should tell you, the biggest problems traders have is greed. I'm telling you from personal experience too. Most times, I've done my trading analysis, I've planned, I've said, okay, today I'm going home with 10%. 10% and I'm done. But sometimes I go into the market and say, oh, the market is so lucrative. They're doing what I expect them to do. Oh, they're going to give me 100%. And then I'm there. Sometimes you exceed the 100% and then you're still there. What are you still waiting for? Take your money and go. Don't be greedy. Something can happen. Maybe a news comes in and then you're not online. Your mind is, oh, it's so good. Oh, let me go do what I'm doing. And then, boom, something happens. Maybe a news comes in and then it goes back. You can even blow up your account and lose everything. Then you start regretting. Oh, at the point I had 30%. Oh, I made 40% at the point. Why didn't I just take it? Greed is one of the biggest problems of traders. Greed. So your lot size, greed. If you take a big lot size, that's the greed I'm talking about. If you're in the market for too long, you've already achieved your target for the day. Greed. Leave the market. Tomorrow is another day. You come back again tomorrow. You are here to make money. It's not a competition. Little by little. Little by little. Before you know it, your $100 is $150. It's $200. It might look small because your capital is small. Imagine if you are trading with $1 million, for example, and then your $1 million is now $150 million. It looks big, right? So your capital is where your problem is. But let it not bother you. You can't grow it. Be patient. Be patient. And don't leave off your small trading accounts. Don't leave. You have a $100 account and then all your problem is on this $100 account. I have to pay my house rent on this dollar. I have to pay my fees on this, my light bills on this. No. You're going to trade under pressure and your accounts will not grow. Before you know, your $100, you even spent it all. Or you might have blown it up because you were trading under pressure, trying to make so much money. So, what have we talked about today? The analysis, trading analysis, the technical, the fundamental. Don't worry, I'm going to break them all down later in the book I'm going to be sharing here. where you can read in total, in depth, and get more ideas about what these analyses are, the technical and the fundamental analysis. But I'm just here to make you understand that these are what are required in trading. Yes, but basically, just have your trading plan. You know what a pip is, the movement the market makes, your lot size, the size with which you pick your trade, and then what are you trading on? There are many things you can trade on. Are you trading on currencies? What are the currencies? Those are the ones we have where you see the Euro USD, the GDP USD, the JPY USD. What do all these things mean? It means the euro. Euro is the currency used by the European countries generally. You understand that. USD is the American dollar. You're trading the USD against the euro. That's just what those people grammar you're hearing is. The American dollar against the euro currency, the GDP, the pounds against the dollar, the JPY, Japanese yen against, so also so many other currencies against each other. So now you look for news that or information that affects these two currencies you are trading on. If you're trading Euro USD, you're looking for information that affects the dollar and the euro. If you're trading the pounds and the JPY, you look for the information that affects the pounds and the Japanese yen. With so many other currency pairs, there are many of them. Then you come to the metals. You have your gold against the dollar, you have your silver, your copper. Depend on which one you want to trade. Pick one, look at it, practice it for a long time, understand the movement. Some of these markets move in a particular way over some time. You see, if you look at them, you know that they move in a particular way. You just need to look at it and understand it. It's simple as that. Just look at it and understand it. Practice it for some time. Practice on your demo for some time. Understand the markets before you come into the real trading. We have I talked about the currencies, the metals, cryptos. Yes, your crypto is there. Your BTC, Ethereum, and so many others. You know, some people come and say, "Well, you say, what do you trade?" I trade crypto. How do you trade crypto? Are you just holding or you are trading? They are two different things. Some people don't know the difference. Just say, "Oh, I'm trading. I'm a crypto, I'm BTC. I'm trading BTC." What are you doing with BTC? You just buy and then you hold it. Just leave it there. If the general price of BTC is going up, fine, you are going up. If the price of BTC is going down, you are losing your coin. You're not trading, you're just holding it. But when you are trading, you have your BTC with you. You are trading it. If the price of BTC is going up and then you have analyzed and it's okay, then you buy. You can buy to a particular time. The prices fluctuate. You buy to a particular point in time and then the price of BTC can start going down. At that point in time, you close your buy trade. You've made some profit. Then you join them going down, selling. You know, and you make profits selling at that point in time too. So now you're a trader. You trade BTC. You're not just holding BTC. I don't know if you understand me. You're not just holding it, because when you hold it, maybe you have one BTC. By the time BTC was, let's say $10,000, and you had it then one BTC. You held it on, and now it's $120,000 now for that one BTC. Fine, you've held it and you've made profit. But this process has taken over a long period of time, probably about 3-4 years. But it's possible you could have been trading on that BTC, buying when the price is up, selling when the price is down. Now that one BTC you've held on and traded with, now, then till now, might be worth more than, not might be, should be worth more than the current price of one BTC, which means you've made profits on trading your BTC, not just holding it. Fine, you might have made profit from holding it. What if the price kept going down, and it didn't go up, and you held onto it? What would have happened? Most people lost a lot of money. There was a time BTC went up to 98,000 thereabout, and then fell down up to about 30-something thousand. A lot of people were scared at that point in time, and they sold it off then and just held their money back. They just put their money in their pocket. At that point in time, you've had something that was at like something thousand, then you sold it at 30,000. You lost 60 something thousand because you were holding. But if you were trading when it was 90,000 and started going down, you joined the downtrend and then you make money while going down. I don't know if you understand the difference now. That's what trading is all about. The currency, the flow of whatever you're doing, the flow. Currency, it flows up, down, up, down. So the idea is buy when it's going up, sell when it's going down. Analyze the market. Buy when it's going up, sell when it's going down. That is just the essentials of trading. That's just what trading is all about. It's not big grammar. So for today, we're going to stop here. But I want you to know at the back of your mind that the expert in anything was once a beginner. Yes, the expert at anything was once a beginner. Now it might look so cumbersome, so hard. You're learning. Someday you look back and say, oh, I remember when it was like this. And then now you're an expert. But what do? You follow the basic principles and the rules of trading. When I come again next time, I remain Kobe, your Forex trader. Have a lovely day.